I'm Howie Lim. This is Money Hacks by the Business Times. Before you get swept up in the aesthetics and interior design choices, quartz or marble, pedestal or floating sink or vanity, etc., best to figure out how much you need and where to get it, especially if you're too paiseh to ask family or friends. Welcome to Money Hacks, a podcast series by the Business Times, where we explore useful financial tips to help you on your money managing and wealth growing journey. I'm Howie Lim. And if you have feedback or an idea for a podcast episode, do get in touch. btpodcasts@sph.com.sg. Helping us out today, Jenn Ong, Managing Director of GXS Bank.
Hello, Howie. Good to see you again.
What are the things to consider when planning a home renovation? Of course, the amount, and I'm hearing cash is the best way to go. Is it, Jen?
So, Howie, renovation can be a big amount. I think, paying up cash, 50,000 on a renovation sometimes is a big stretch for most people. So when we talk about renovation loan, we are saying that renovation loan is just not contractors coming and hacking your wall. There are minor renovation that you might be doing, whether you're improving your kitchen, whether you're renovating your toilet, or even, getting new stuff for your kitchen. So these are expenses that are happening across people from different life stage. Now, we think that renovation loan has to be, clearly, the pricing has to be reasonable, it has to be competitive, it has to be affordable, right? So then it will help consumers renovate. Now, if you look at what's happening in the renovation market, all consumers, whether you, me, people who are out there, will think of some kind of home improvement. And if money is the one that's always holding them back, then I think that becomes a challenge. So look for a loan that gives you flexibility, that is competitively priced, that allows you to repay if you don't need it. So this is what I would advise the consumers out there.
Fair enough. Before we get into the nuts and bolts of comparing loans and where to get the financing, shouldn't we set the budget? I'm hearing different things. Not more than 10% of your property's value, not more than 6 times your monthly income. What's the word?
Right. So, Howie, this is, these are just broad stroke advice that you get out there. I mean, everybody talks about saving money, putting money aside. It applies to anything, whether you must always save 20% of your pay or 25% of your pay. Now, that is out there general advice on money management. But really, depending on how much you want to set aside for renovation, number one, depends on how much you want to renovate, right? Now, if you think that your budget is big enough, you may want to hack one more wall for that matter. If you think that, I only have a certain budget, then you have to compromise on what you have to do. It all boils down to affordability. It boils down to how much disposable income you have on a monthly basis to pay an installment if you take a renovation loan. I think that should be the other way of looking at it. It's no point saying that I want to renovate and spend 100,000, but my disposable income does not allow me to pay off in a monthly installment. So I think it's best to look at what is my income today, make sure that I put away money for a rainy day, make sure I put money away for necessities, and how much do I have left? And use that as the baseline to say that, am I willing to part away some of this money for the next 1 year or 2 years, depending on how long that loan tenor I want to take? That should be a better way of planning.
Earlier, you talked about, trying to pick a renovation loan, flexibility. What about looking into the potential for your property's value to increase? And on that note, we're always told housing debt is good debt. Does that mean a renovation loan is good debt as well?
So housing debt is good debt because it's a secure property. At the end of the day, there is this brick and mortar that belongs to you. Now, secure properties in Singapore is a valuable asset, right? You can actually sell it if you want to upgrade or if you need it anymore, whatever it might be. Now, renovation, at the end of it, if I talk about it is still an unsecured loan, right? You are spending cash to renovate your home. It doesn't mean that just because your home is valued at 3 million, you need to spend 1 million on renovation. It really still boils down to affordability, right? If I have a 3 million home, I might be happy with just 100,000 renovation. I don't put them together. I'm not sure whether just because the home is nicely renovated, you get a higher value. I'm not sure. I think the value of a property is really based on location and the structure. It's not so much whether you spend 100,000 renovating the toilet. So I think as consumers out there, do renovation that will make you feel at ease, that you will love your home, that you come back to a home that you love. But it should not be an anger to say that maybe it will give me a better valuation 3 years down the road. You never know. I mean, there are wear and tear and stuff like this, trends change, fashion change. What you like to renovate may not be another person's cup of tea.
So how to understand these renovation loans, Jen? What are some of the other things to look out for or be wary of?
Yeah. What is important is that when it comes to renovation loan, payments are always structured in a way it doesn't come one bit. It doesn't say that if I need to spend 100,000, I have to draw down 100,000 and pay off the loan. If you think about it, it comes in stages, right? So whether you pay a 10% first, upon laying of, I don't know, foundation, you pay another 30%, and then you want to keep some money for fixture and fittings. Now, the typical renovation loan out there requires a consumer to apply for that loan, and then, the payment is to the contractors directly. A loan that gives you flexibility lets you decide how much you want to apply, when you want to redraw, and how much you want to pay back. I think that one is important. You got to be in control of how much money you want to redraw, how much you want to pay, and how long you can service that loan for. So there is a difference. Flexibility is important. And really, when it comes to a very structured installment loan, consumers will have to pay very structurally. Oh, my due date is $300 and it's due on the 5th. I go and make payment. But get flexibility because cash flow is fluid. If you have more money today and instead of paying $300 for the installment, go and pay $1,000 and don't be penalized by it. So I think consumers need to look for that. When you have good cash flow, try to reduce your debt. By reducing your debt, make sure that you find a loan that doesn't penalize you when you're doing good. So that's how I would advise customers.
All right, we've got more to discuss, Jen. Stay with us. We're taking a break. More with Jenn Ong from GXS Bank about renovation loans in a moment.
Lens on Singapore is now bigger and better. The same deep dive exploration of socioeconomic and geopolitical issues which impact our lives here in Singapore and the region is now a video podcast. If watching a conversation is your thing, join Claressa Monteiro in monthly conversations about things that matter. Subscribe to the BT Lens On playlist in the podcast tab of the Business Times YouTube channel and start watching today. BT Lens On Singapore, now available in audio and video.
And now, back to Money Hacks from the Business Times.
Welcome back. What about fees and charges? There's no free lunch, as they like to say.
Yeah, of course, because it adds up, right? I mean, if you think about a standard fee, you look at the market, they will say, for example, 2% processing fee. Think about it, 2% is quite a big amount if you're thinking of taking a $50,000 loan. Now, that is fee on top of it. That you are already trying to find the best cash flow management tool. Now, you have to actually apply 2% to that loan that you take. Then I think it is a hindrance more than anything. So go and look for something that is clear, no fees attached, clear T&Cs, make sure it aligns with your disposable income and your monthly ability payment. That's what I would advise consumers to do.
How else can we go about relieving our financial stress as we think about renovating our dream home?
Yeah. First, you have to prioritize what is most important, right? I mean, we all have expenses that we need to spend on. Necessity, take care of the utilitarian and the necessity needs. Then, yes, if you think of renovation, if you have the flexibility, financial freedom, yeah, go for the full works. But if you don't, then do what is important first. Now, I've mentioned before, renovation can be fixing the toilet pipe for that matter. It can be fixing the kitchen or the kitchen sink because it's leaking. So as a consumer, plan what is important and do it. Now, obviously, if you feel that you have the capability to take a bigger loan, then go for it. But be comfortable every month. I just don't want consumers to have, to be in a situation where on a monthly basis, they have to take their income and pay a loan. That becomes really painful, right? I mean, what's the point of having a big house, nicely decorated, but you don't have the capacity or the ability to be happy on a monthly basis? Yeah.
Jen, help us figure out which loan to take then. Which one would save us money or really is the best bang for buck, so to speak?
Yeah, I mean, I think there used to be. So Howie, in the past, maybe 10, 15 years ago, there are renovation loan structure out there in the market. But more and more what I'm sensing in the lending market today, that is no longer around simply because what is more popular now is a personal loan. Now, a personal loan is unsecured, but a personal loan is not restrictive. Renovation loan in the past is, you must show me your renovation contract. You must tell me who your contractor is. You must tell me when to pay. It's very structured. Now, when it comes to that, then consumers say, my God, it's very structured. How if I want to make changes? How if I, instead of doing this, I want to hack another wall? What happens? Do I have to get a different quotation? So it becomes a friction in the journey. Now we see personal loan out there in the market. And for GXS, we're saying that, hey, personal loan is needs-based. Now, if you need to do a renovation, use a personal loan. It's the same. It's an unsecured loan. It is also underwritten based on your credit bureau score. It is also based on your ability to pay back, but it has a lot more flexibility. You take the loan, you decide the tenor. You pay the contractor. And in the past, renovation is just not, it only allows you to pay the contractor. But, when we think about renovation, once the kitchen is done, you want some equipment, you want some of the, a better brand mixer or whatever. You must have the ability to then, go anywhere and buy that equipment if you want to. It was pretty restrictive in the past, but I think we are making it very flexible. At the end of the day, take what you can afford to pay back. It is what I say. The personal loans are out there across all the banks, but look for one that is very customer friendly, pocket friendly, if I may say, not to add unnecessary costs, whether there's a processing fee or there is a administrative fee. Just read the fine lines. That's what I'm saying.
Is there a one-stop place which helps us figure all this out? Also, what if the contractor runs off with my money?
Yeah, which, I'm glad you said that, right? So imagine you do the control. You control when you're going to pay. I will check the contractor work, right? I mean, if it's not done well, I may not make the payment. In the past, because you have to pay the contractor, the bank makes the disburser. But now you're in control. You can check the work before you make payment. Again, if you think about the personal loan out there, it is there for you to be in full control. And you don't have to worry about the contractor running away, taking all your money and running away.
If nothing else, your top tip, Jen.
I know we're talking about renovation, but to me, taking a loan also means that it's a commitment. Doesn't matter what loan. As long as you take a loan, there's a commitment. Now, customers do need a loan sometime in their life stage. It's okay to take a loan, but take a loan that is friendly to your pocket. And 3 things you look up for. The interest rate. What is the interest rate against competition? Whether there are fees and charges that you need to take note of. Those are very, very important because it adds a huge quantum to the loan amount that you actually have to pay back. And the third thing is get a loan that gives you the ability to pay off anytime without a penalty. Because cash management is fluid. I may have more money this month and I want to capitalize, I want to use it to pay off a debt. And that's what consumers should have the freedom to do. So look out for all these 3 things and get a loan that makes sense for you.
Oh, I forgot about offers and rewards. Should we be careful of those?
Yeah, I mean, to my mind, offers and rewards are pretty tactical, right? If you think about it, across all companies, they will tend to tie a renovation loan to things that are complementary to their vertical. So whether you're going to have a new fridge, aircon being delivered to you, right? But I find that offers and rewards here are more suitable for a lifestyle. Like a credit card payment, you can have offers and rewards, whatever you do. But when it comes to renovation, the loan amount is big. Don't be, in a way, fooled by the offers and rewards and say, oh, well, you know what, I'm going to get something big from here. It's worth it. No, do your calculation. That tactical offer that's put up there for you may look like what you need, but when you actually put dollars and cents and write it down and map it out, it may not be worth it. So it's best to find a bank that gives you the 3 important things. Low interest, no penalty, and ensure that it gives you the flexibility to pay off as and when you want to.
Thanks, Jen. Always a pleasure.
Thank you, Howie. Always nice talking to you.
Takeaway order Money Hacks 218 is ready. You may have renovation fever, but don't let your wallet catch a cold. Finance your home facelift without breaking the bank. You want to avoid penalty fees and never skimp on checking a contractor's work, because nobody wants $1 million kitchen without plumbing. A big thank you to Jenn Ong, Managing Director of GXS Bank. I'm Howie Lim, and this has been Money Hacks by the Business Times.
This is a podcast by the Business Times. Find more BT podcasts at businesstimes.com.sg/podcasts or wherever you get your podcasts. This podcast is meant to provide general information only. SPH Media accepts no liability for loss arising from any reliance on the podcast or use of third parties' products and services. Please consult professional advisors for independent advice.